Thanks for tuning into Talking Point. I'm your host, Niraj Shah. One of the talking points of all of the last earning season, or the season which is currently underway, so to say, for the last quarter, has been the performance of IT and IT-related companies, especially at the mid-cap end. Now, eClerx was no different. The company posted a very strong quarter. USD revenue in the quarter was $63 odd million, a sequential uptick of 19.7% in USD terms and 19.3% in constant currency terms. Organic sequential growth at 6.3% on constant currency basis. The full year revenue at over 210 million was a 5% growth on a YOY basis, and the Q4 margin expansion was in part due to strong organic growth in offshore and inclusion of an acquisition Personiv, which supported and of course supported by stable work from home environment. So they came out of the good quarter. It showed in the way the stock reacted, up 20% and is up about 12 or 13% in Monday's session as well, early trade. Let's get in Rohitash Gupta. He's the Chief Financial Officer of the company, to speak about what went right in the quarter and how would the year ahead shape up. Rohitash, good morning. Thanks so much for joining us and Bloomberg.
Good morning,
and congratulations on the good quarter.
Thanks, Niraj, for inviting me. And you're right that this quarter was kind of culmination of the year, and it was a high point for us in the year. Although the year started with quite a bit of gloom and doom, as we all know, because of sudden lockdowns and pandemic impact, etc. And there was a lot of uncertainty as to what will unfold as the year goes by. But I think the IT sector and BPM sector both have shown resilience during this time. Not only in terms of quickly adapting to the work from home setting in Q1 itself for most of the companies, and then demand also unfolded, and resurrected back starting from Q2, Q3, and Q4 onwards. You have to just keep in mind, and this is true for probably all the companies, including eClerx, that in the H2, some of the growth would have been the pent-up demand because the spending could not have been done on various digital projects, etc., during the H1. So you have to keep that in mind for the entire sector. But having said that, the momentum has been good, and the clients are very receptive to continuing on the journey of digital transformation, analytics. And as you can imagine, even the traditional sectors like call centers or back office have grown during this time, simply because in a remote setting, what you need more is remote support, right? So in that sense, even call centers volume have gone up, and all that has reflected in the sector's growth.
Now, is the point that you mentioned about how the H2 growth was probably a factor of pent-up demand, is that what is leading you to not sound very convinced about very strong growth in FY22? Because after the exit quarter being so strong, I've not heard too many companies who are circumspect about growth for FY22. You guys didn't seem all that convinced about very strong growth. Yes, there will be growth, but you didn't sound very convinced about exceptional growth.
So Niraj, the reason for
on the call, that is.
Yeah, the reason for that is that our visibility always, not because of pandemic, in general for our business, is fairly short term. And it is not because the project or work that we get is short term. It's because we have very, very deep relationship with fewer clients. You can look into our client concentration metrics, and we are deeply entrenched into various businesses of those clients. And one of the reasons we have stayed and grown with those top 10 clients is because we have given flexibility and agility to ramp very, very quickly for any new task that comes along. And that's why our clients don't need to give us, 6 months, 1 year, 2 years out visibility. And that works both for us. Our model is built like that, and they like the flexibility too, right? And quick agility to ramp up things. So we do expect some growth because none of the dynamics of the last 2 quarters have changed in terms of pipeline or client conversations, etc. But painting that picture for next 1 year, 2 year will be difficult for us.
Okay, now just wanted some clarity in the call. Mr. P.D. Mudra mentioned that if the client volatility doesn't come back, then it could be okay. Otherwise, there could be issues. Can you give us some clarity around this? Do you expect by natural course of business to be some client volatility in some of your key client accounts?
We have had about three large issues between FY16 and FY20, where large chunks of our 3-4 clients have gone away, and that was mostly offshore business, primarily because of insourcing or other reasons, and corporate actions in the clients. In last 1 year, which is the pandemic year, we didn't see any of that happening. And even at this point, we have no information about any such large event happening again. What has also unfolded in last 1 year is that the natural churn, forget the large events, that didn't happen, as I said, but even the natural churn has come down a bit. Now, this natural churn may increase further when the things become normal, because when clients implement new technologies, sometimes they are more efficient, right? And while you may be participating in those opportunities, it may not be a revenue accretive thing. So we have to keep that natural churn factor also in mind, which may surge back. And one-off client events, although I said we don't have any visibility, nothing has happened in last 1 year, but those are totally out of the blue events, and after 1 year, 2 years, it's very hard to predict if anything of that can happen or may not happen.
Okay. No, the only reason why I'm stressing upon this is when I looked at the call transcript, somewhere in the first half of the call, there was you guys expressed some bit of forthrightness about there not being complete certainty on growth. But later in the call, I think you did mention that if you look at a YOY basis, because of the depressed basis, the growth numbers could look good even if they don't look good sequentially. So my simple question is, Rohitash, that do you believe that you can do mid-teens kind of YOY growth in FY22 or FY21? What is the probability of that?
See, on reported basis, because of the inorganic event, that's probably an easier question to answer. But I think what you mean is organically. And that's where a little bit of uncertainty comes in. But as you know, the H1 was very depressed. Even from our previous history, it was depressed, right? So given that base effect, I think reaching double digits may be possible YOY organically. And that doesn't look a very far-fetched state to be.
And if you add Personiv, then it only adds luster to that number.
Yeah.
Got it. Okay. Can you talk a bit about business? So first, which segments, I believe you classified into 3 buckets. Can you talk about which segments are looking strong and why? And do you expect this growth, while I agree that for you, growth may be, visibility is usually short-term in nature. Is there a segment wherein, based on conversations or based on the landscape, you believe that the spillover of growth into FY23 also might look strong?
Yeah. So we have 3 segments, and then we have added Personiv. So let's talk about those organic 3 segments first. So financial markets, where we work with sales and trading teams primarily for the investment banking arms. There, the impact of COVID, both negative and positive, have been the least. So business has been much more steady than the other 2 businesses. Wherein in customer operations, where we provide digital care and customer experience services, there because of primarily, I would say, a supply impact, the impact was very sharp in Q1 of FY21, but the recovery was also very fast. And we continue to see very, very good growth in customer operations even today. Third segment, which is the largest one for us, is digital. There also the impact was very, very sharp because of the lockdowns in the client economies. Let's say Italy become very, very badly affected in Q1, Q2. And we have a very good chunk of business there. The US also, we had some impact. And the onshore consulting business, which was there in digital also, that also got impacted because you can't work from client premises that you were working earlier. and that business also recovered now. So I would say among the three, because financial markets has been much more steady, uh, which is a good thing. But compared to other two verticals, the momentum, I think in those two verticals, momentum is slightly larger as of now. And Personev, just keep in context that when we acquired the company for last 2 years, it has been flat. And then COVID impacted their business also, primarily because of supply side issues in one or two quarters. And then now in Q4, our Q4, we have crossed 30 million run rate again after some lull. So how that business shapes up in a 1 or 2 years, that will also determine our total trajectory. Because if just past has to continue, then it will kind of slow down what we are talking or seeing organically.
So just one quick follow-up question, Rohitash, and that is some mention around how you guys have worked jointly on a few deals, one large deal which you already bagged, and there are 3 or 4 in the pipeline wherein you might do cross-selling as well, and might be easier to now convince Personev clients to extend those relationships to. So on that front, there could be some positive developments which could hold you in good stead, not just in FY22, but the times ahead.
That's right, Niraj. So I think in first 6 months, we have been able to start to work jointly, especially on the sales synergy side. And things are happening on both sides, cross-selling into some of Personev clients, and Personev helping us with some of the delivery capabilities that they have, which are slightly unique. So 3 or 4 deals are in flight. The outcome is yet to be awaited on most of them. 1 or 2 may have fructified, which is a good sign, but larger picture will unfold only, I think, by this calendar year end.
Okay. Okay. So then let me get back to numbers. You mentioned that maybe you might hit double digit on the organic front, and then Personev adds the luster, and the Steve will be happy even with the combined numbers being high. So that is great. What about the operational metrics? You hit fairly high notes in Q4. How much of that is sustainable? What will go away and why?
Yeah, so as we mentioned earlier, the Q4 margin metrics are true reflection of the current state of affairs. And the only partially unsustainable thing in there is essentially the cost reduction because of the work from home environment. So we think that some bit of that may go away towards later part of this FY when we return to office in larger numbers, and that amount could be 200 bips or something like that in terms of return to office OPEX impact, including travel and other things. The other impact, which I won't call out because that's usual every year, increment impact, that will come in Q1, and that will be another 200 bips at EBITDA level. But that wage impact typically gets normalized if you have decent growth through the year, and at least as of now, we think there will be some growth. So hopefully that will not be too much of an issue as we go through the quarters of this year.
So 33%, if I'm not wrong, in Q4, you think normalized for the year, you steady at around 30%? Would that be a fair assumption on the EBITDA?
Yeah, I mean, around that number will be a fair assumption for the year. Yeah.
And therefore, EBIT, I think Edelweiss note says that EBIT margins FY22-23 could be about 20%, right? I mean, that range roughly?
I don't know about their estimate, but yeah, you are right. So basically, the drop will be similar from EBITDA and EBIT perspective, okay. Because one kind of unpredictable factor is also the currency, right? And the other income, how it will flow in. I'm assuming in all those conversations that is flat, but it could be upside or downside as we go along, both at EBIT and EBITDA level.
Last couple of questions, Rohitash. One is, would the PAT rate or the rate at which your profit after tax grows slow down a little bit compared to the top line growth because of the tax rate normalization? You referred to that in the call about how some tax benefits for Personiv or some of the others might. So would that be a fair assumption, or you think you'll largely be able to match top line, bottom line growth?
So tax rate is not such a big ticket item, simply because all said and done, Personiv is a smaller portion of the overall business, and tax rates for our native business are fairly steady. I mean, you can imagine something is happening on the US side. Lots of changes may happen, are happening. But as of now, we see our tax rate to be fairly steady. Yeah, Personiv, some units may go out of beneficial SEZ tax rates in 12 to 24 months, but that will be a minimal impact to the overall picture.
So you largely match. Okay, great. That is one last question. You still have a boatload of cash, you would say, and therefore my question would be that I know you mentioned that because you are still not within that required time frame wherein you can do another how do you say, a buyback, so you may not be able to give a clearer picture, but I'm just wondering, the reason I asked this, Rohitash, is that over the weekend there was this one large call that happened. I don't know whether you heard about it or not, between a media company and a slew of investors, wherein the investors, well, roasted the company for making a change to the dividend or the minority shareholder rewarding policy, despite cash being there on the books. And we all know that the cash being lying idle on the books right now in these interest rate times is not quite remunerative. So would you reckon that whether a buyback or something else, even with the tuck-in acquisitions that you do, but a minority shareholder rewarding points will be a part and a major component of the second half of eClerx FY22?
So Niraj, I will say only this, that you can look at our last 4 or 5 years history. Our policy is one thing, but action is another, right? And both have been consistent in our case.
Sure.
And one should not expect any change to that, both on ground action as well as policy for eClerx.
That's comforting. Great. Once again, congrats on a very good display in Q4, and I wish you and your team all the very best for FY22, Rohitash.
Thank you, Niraj.
And viewers, thanks for tuning in to this edition of The Talking Point.